Hello, everyone, and welcome back to TradeFinder Live. It's good to be back. Hope everyone had a great holiday weekend. My name is Zach. Most of you are likely familiar with me by now, but if you're joining us for the first time or might be new, welcome. It's great to have you on board. We have to go over some housekeeping details about the session firsthand, and then we will get into the good stuff. So first and foremost, this is our live disclosure disclaimer agreement. If you have attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website at all times, so you can feel free to read it there or take a screenshot of it now if you like, but that's the main point to take away. Now, again, most of us out there are likely familiar with the Q&A process. We have a very limited Q&A portion at the end of this session. We always have so many great questions, and we never will get through all of them. So please don't take any offense to that. No, it has nothing to do with the validity of the question, and take it as encouragement to attend the insiders meeting when there's a 45-minute Q&A portion, and obviously a much higher likelihood of getting your question addressed there. All right, so that covers the housekeeping details. The market continues to drift higher, but supported by lower interest rates and a lower dollar. Can it continue? Interested to hear Rob's thoughts on that. And of course, very excited to interact with you all. So at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, Zach. Hey, everybody. Welcome. I second Zach's motion of hoping everybody had a great holiday weekend, hoping you had the opportunity to spend some good quality time with family, friends, and significant others. And Zach, if you'll allow me to, I can turn on my video, although I don't know why anyone wants to look at my mug anyway, but
I guess just this one time we'll make a special occasion for you, but it's not making a habit.
yeah. All right. There we go. As you can see, I'm still in the mountains, still in the cabin, and I saw Mick saying hi from sunny SoCal. Well, I can tell you it was sunny today in the mountains, but I'm guessing that your temperature was probably about 50 degrees warmer than where it was here. We didn't make it out of the 30s today, even though it was sunny and with a 15-mile-an-hour wind. So the chill factor was down there, but that's the other aspect of spending time in the mountains. All right, so I'm going to go ahead and switch over to the chart, and we'll take a look at the market. As Zach said, we have continued this drift to the upside. Looked like perhaps we were going to try to move lower on the open, but buying came in, and here we are still trading right underneath those highs from July. So the question is, can we break those highs? Can we break up to 460? I'll also show you the chart of the 10-year rates were kind of flattish early in the trading day and then moved to the downside. A little concerned about the dollar, which we'll show you as well. But if we look at the 10-day moving average, you can see that this kind of drift sideways to higher has allowed the 10-day moving average to catch up a bit, so we're not quite as overbought as we once were. However, I still remain cautious on the fact that this move was awfully vertical and we have multiple gaps here. All of that is concerning, and so I just feel like perhaps we're getting a little bit sucked in here, feeling like, all right, the inflation data is better. The market's pricing in Fed rate cuts next year. We're good to go. Maybe we are, but I'm still a little concerned. And until we can break up to that 460 level with follow through, I'm still worried about the fact that all of this could roll over and head back down. So I just think we need to be cautious here, pick your spots, and don't go crazy to the upside. Nothing like all in on the bullish side. Not yet. If we could break above 460 with follow through, totally different thesis then. But until we do that, we have to be concerned about those things that I have mentioned. So if you're making some trades to the upside and having success, congratulations. But as I said, please be cautious of the fact that there's some things below us that could cause pretty significant move to the downside. We've all learned by now that the market takes the stairs to the upside and the elevator down. Old adage there, but it's true. I have the Elliott Wave button on, so as you can see, we still do not have a qualified Elliott Wave pattern in the SPY. Here's the 10-year, and as you can see that we opened and rates were a little bit higher than yesterday early in the trading day, but then we finished near the low of the day on rates. And look where we are, exactly dead on the nose of the 38.2% wave 4 correction. So that fib level 38.2. So was that it? Was today's move the end of the rates moving to the downside? Well, certainly we'll find out over the next couple of trading days if that's going to hold. But we have come down. We have filled this gap here from September on the 10-year. Just interesting that we're spot on that 38.2% fib level. And then here, as I mentioned, on the dollar, look at that move down in the dollar. So what is going on in the dollar? If things are good here in the U.S., yes, of course, if the economy is okay and the Fed starts cutting rates aggressively, which is what is being priced into the market, that could have an effect on the dollar and cause it to go to the downside. But if the reason that the Fed is going to be cutting rates aggressively is economic weakness, and that economic weakness is global, you would think that that would be supportive of the dollar. And the dollar would at least hang in there, continue kind of this channeling motion that we had here in September and October. So that seems like a good balance between the two. But we've broken to the downside of that, significantly lower. Now look where the wave 4 is on the dollar at the 61.8% fib level. So now we have the 10-year at the 38.2% fib level, and we have the dollar at the 61.8% fib level. And if those two hold, and we do start to move back to the upside on both rates and the dollar, again, that could be what triggers my concern, which is the fact that we could have some sort of a retracement out of the market, at least coming down to 440 here and filling that first main gap and coming down to test support there at 440. So I'm not saying that the market is going to move lower. I don't know. Nobody knows where the market is going to go from here. What I'm trying to do is give you signals that we can watch for and make our trading decisions from those. And so what I am saying is that if we break above 460 with a follow through, go long. But until we do that, be cautious and be wary that it wouldn't take much to trigger us down to at least 440 in the SPY. And if you have a whole bunch of bullish trades on, you might want to consider tightening stops, being a bit more conservative, taking some gains where we have them, etc., until we know for sure. When we look at the VIX, that we had a weird spike intraday in the VIX, so don't worry about that spike there above 14. It was just kind of really a low volatility day, but we are below 13, so we've traded below there. We closed below it. Are we going to continue lower? We could. We could go down to 10. We're trying by having multiple closes here below 13. We haven't really had a day with follow through. We had a break below it with kind of a non-eventful day on the Friday, and then just kind of meandering around here underneath 13. So not a significant break, but if we're going to have that seasonal drift to the upside, which some people have noted is what normally happens, and again, we just try to put as many percentages in our favor, but even though the market does tend to drift to the upside this time of year, it hasn't every year. There have been years where we've had significant moves lower, and that could happen again. A few years ago, we bottomed out on December 24th. So we actually bottomed on the market during a period of time where you might have thought that we were going to move higher. So I thought I would bring volume back in, and you can see that just not a whole lot of volume in this upward to sideways movement that we've had here. It almost feels like we're still in the holiday week last week. And I have talked about this in the past, that market makers and institutional managers that have hit their benchmarks to collect their bonuses, which is the way they get the big money. If they've hit those, they're done. They close up shop on the Thanksgiving holiday. They take the month of December off, and they just wait to collect their bonuses at the end of the year. Those managers that have not performed to the SPY, S&P, chase the market and try to drive the market higher so that they can hit the benchmarks with derivatives, whatever, towards the end of the year and collect their bonuses. But it tends to be lower volume than what happens normally. So that may tell you why we didn't continue and follow through with the downside of the lower volume, etc. But anyway, that's what's going on with the S&P. We'll take a look at our other markets real quick. On the diamonds, the DIA, all these charts are going to look very similar, which does tell you that the markets are lockstep within each other. The DIA kind of making a pretty strong run at those July highs, a little closer to it than the SPY is. But once again, very vertical on the move to the upside with gaps here as well. And, you know, it feels fine when every time you have a little bit of a sell-off attempt, which we've had the last few days, that gets bought into, gives you a little bit of confidence. But I feel like that's, false confidence. We have these gaps here. We're nearing those July highs, pretty vertical move. The 10-day moving average is catching up, but a little more separation here because this has been more of a move to the upside where the S&P is kind of rounded off a little bit. Yeah, we just we got to keep an eye on that. Looking at the Qs, you can see that continue to move above those highs from July, the one market that has taken out the July highs and been supported, as Zach mentioned in the beginning, by those lower rates, but not real significantly to the upside. So some of those Magnificent Seven stocks have been doing okay. Others not as well. NVIDIA struggling a bit after a blowout earnings quarter. A little bit of profit taking there. Perhaps it turns around and gets going if the market does hang in there. But right now, we're just kind of trending right on top of those July highs. So that was resistance. We broke above it, and now we're going sideways. Can we hold that and then take off to the upside, or are we going to give that back and roll over? We have gaps here on the Qs as well. But once again, no five-wave pattern. So none of the major markets have a five-wave impulse pattern except the good old IWM, which has a five-wave pattern to the downside that's currently qualified. The wave 4 right near the 61.8% level, just going dead sideways on the IWM. Perhaps we can break above that 180 level. If we break above 180 on the IWM with follow through, you'll know that the rest of the market is doing well also. The SPY, the Dow, the Qs, they'll all be performing well if the small caps break above 180 with follow through. You can see the 10-day moving average is caught up. In fact, we kind of tapped it on the low today. So hanging right in there. But until we break above 180 with follow through, we do have to keep in mind that this is a qualified five-wave pattern to the downside. And until that goes away or becomes disqualified, we have to keep in mind that that is a distinct possibility. And that would tell you that the whole risk-on environment is gone. The small caps, IWM, give us a really good indication of risk tolerance in the markets. A lot of people look at it for that. So something to keep a close eye on there. on the IWM. Taking a look at a few of our international markets, looking at the EWA. You can see here the Aussie market, EWA. That's Brazil. We might as well look at Brazil. Freudian slip there, which is looking pretty good. You want a place to look to the upside? As crazy as it sounds, how about the Brazilian market? We have broken above this wave 5 high from July today. Can we get follow through tomorrow and look to move up towards 36? It looks quite possible. This looks fairly strong on the move to the upside. And looking at the DMI, that looks constructive as well, with the positive directional indicator moving back up after some consolidation, trying to break out. Perhaps that breakout continues on the EWZ. So pretty interesting there. Here we have the Aussie market, and the wave 4 has broken up to the 71% level. This would be quite interesting. If Mr. Elliott was here with us, he would be saying, okay, well, the wave 4 got to 70% and above. There's a likelihood that that 5-wave pattern is going to become disqualified. So even though it still looks okay and it's still labeled here, Mr. Elliott would say that that probably is going to become disqualified. But he had enough respect for Fibonacci levels that in the algorithm, which is how this software, by the way, this software is from hubb.com. Some of you in the last U.S. market update over the weekend on our YouTube channel were asking about a live version of this, which is available now. So if you want to learn more about it, go to hubb.com. But Mr. Elliott, anyway, this is programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. But he did write some notes. So he has rules and guidelines. And I was interested in reading his notes, etc. And even though this will continue to be labeled as a wave 4 all the way up to a 78.6% fib level, he noted that usually when you get to a 70% corrective level in the wave 4, it's going to become disqualified. Not every time, but often. And so if that becomes disqualified, then you start to look for the EWA to move towards those highs from July around 23.5. When we come down here and look at the DMI, there's good and bad. There's good separation here between the two directional indicators. You have the positive on top and going up, the negative going down. The ADX is rising, but it hasn't gotten above 20 yet. And it needs to get both above 20 and above that negative directional indicator. At that point in time, it would show support, and perhaps that would give enough strength, energy, whatever, to break up above that 23.5 level. But it just doesn't seem to have the strength behind it yet that you would want to see if a downward pattern is going to become disqualified. Now, next week when we look at the charts, could be totally different. But for now, that's how it looks. So the EWC for our friends up north in Canada, you can see a nice move back to the upside. Not quite the same stuff that's going on here in the U.S., not really near the July highs yet, and also gaps to contend with all over the place here. But we are getting close to a resistance area at 35. If we can break above that, then we probably go to 36. But we've got to get above that with follow through first. And right now we're just kind of going sideways underneath it. So not a whole heck of a lot going on in the Canadian market at this point in time. And then the INDA for the market in India, wanted to show you that. Look what happened today. So we've been going sideways for a week or so right here at this 45 level and waiting to see if we were going to break above or below that level. And today we broke higher. So can we get follow through there on the INDA? If so, if we can get a higher close tomorrow, we're very likely going up to that wave 5 target around 47.5. So keep an eye on the INDA tomorrow to see if we get follow through. Right now, we just barely took out that wave 3 high that occurred back in the beginning, early part of September. So we need that follow-through day tomorrow on the INDA, but looking pretty good. And if we can get that follow-through, I would say that probably looks even better than the Brazilian market that we just looked at. Also wanted to show you one of our alerts that we sent out to our subscribers at EWOTrader.com. It was on MU, Micron Technology. This was a nice one, a one-day trade. So we entered on the 13th of November. And you can see here's the chart that we looked at. Big, long zigzag pattern where we had a flat inside the C wave. So we had a complex C wave and a target price up around 82. Well, look what happened the very next day. Well, the very next day, we had a gap to the upside. Well, now you can see with that gap up, we have a gap lower here, a gap here, big separation from the 10-day moving average. So we were overbought short term, even though we hadn't gotten to the target yet. So we're trading at 78, and our initial target, and this is why trading is difficult. Our initial target was 82. So we're only at 78, but we can close this position out with a 44% gain in one day. Well, if we can get 44% in one day, we're taking that every time, even though we haven't hit our targeted price yet. And if you want to know why being overbought matters, look at this chart. That's where we were on the 14th of November. So here's where we are on Micron right now. So there we were on the 13th. So notice we were trading at 74.78 on the close. So that was the day we sent the alert out to our subscribers. The next day was the gap up. And so we'd gotten up to a high of 77.39. So there was our 44% gain with that gap up. Look where Micron is now. All right, so we kind of went sideways after that gap up. Now, today's close is 76.12. Now, if we go back to the 13th when we entered, 74.78 was the price, okay? 74.78. We're trading at the close today, 76.12. So we're still higher than where the entry was, right? So, okay, that should still be a profit. We should still have a gain. Even though maybe we gave some of that gain back, we should still have a gain. Do you know where that option is trading now? Look it up. Where the option is that we put on right here, the January 80 call that we entered at 236, closed it out at 340. So that's where our 44% gain came from. Remember now, we're nearly $2 higher than where we were when we entered, and it's only the 28th, so this is 2 weeks. So 2 weeks, we're still nearly $2 higher than where we were. That option is trading at $2.20 right now. That's where it closed today. That's a loss. That's a 16-cent loss per contract. That's why trading is so difficult right now. You have a call option on a stock that, okay, it went up, it came back down, but it's still higher than where you were. It's only 2 weeks, and we're in November, and it's a January expiration option, so there shouldn't be much effect on time decay. We're not in that last 45-day window yet, and yet here you are, $2 higher than where you were when you entered, and you have a loss in the position if you were still holding it. That's why I keep saying, be cautious, get in, get out, take your quick gains. That's what we've been doing. And now let's wait and see what happens with the market. And it's not like the VIX was at 30 and came down to 20. So we had a big drop in volatility. We've had low volatility the entire time. So pretty difficult in the world of trading right now. And that's why our alert service at EWOTrader.com, we try to help you through these minefields that are occurring in the market right now. So taking a look at some of our case study considerations that we have identified in past trade finders, and we close out a whole bunch of them, but we still have a few that would be considered open, or if you were watching these. Here was BP, which granted was a pretty vertical, not something that I normally do, but I did have a feeling that we were going to have good earnings reports from the oil companies, which we did, but then they all guided lower. And then there was some consolidation going on, purchases, mergers, acquisitions, things like that, but mainly lower guidance. So we came down, we've moved back to the upside. We talked about this last week. As long as we can stay above 35, I think you can continue to keep an eye out on this. If, and I want to emphasize that word, if the economy is going to be okay, and that we're not going to go into some sort of moderate or significant recession, oil should start to move back to the upside. If it doesn't, that's a signal that there's problems. Problems right here in River Cities. But as long as we're above 35, keep an eye on that one. And then MPLX, which we looked at the same day, which was October 17th. So we did two that day, and we were at $36, and we're at $36 again. So we're right at where we were. Well, as you just saw in Micron, if you had call options, they're probably still at a bit of a loss, even though the stock came down at that fib level. We bounced back to the upside, and we're right exactly where we were when we got in, and perhaps we can move higher. So what all this means is it almost seems like the market is trying to lure people in to selling puts, selling naked puts as a way to make money on directional moves to the upside. It's been my experience over time that every time the market does that, it's setting those people up for a significant move lower. And when you sell naked puts, you can do okay for a while, especially in an environment like we've had recently where they're taking premium out. And so you switch over to that, and as soon as a majority of people do that, then the market goes down and takes a chunk out of all those people's trading accounts. So be cautious if that's what you're doing. And then looking at the GLD here, and this was on October 24th, and bam, nice move to the upside today on GLD. We talked about how we needed to get above 185. If we could do that, we might have something cooking on GLD and the metals. And there it is. There's the move today. Now, can we get some follow through on that? So nice move on GLD today, trading well above the 10-day moving average, however. So can we follow that through tomorrow? Maybe we need to go sideways for a couple days, but here we are right at those highs from the beginning of May. And if we break above that, then we're off and running again. Why? Is this a place to hide? Why are the metals catching a bid? That's a topic of discussion that we could go through for a while. The bottom line is looking at the technical patterns. We needed to break above 185 with follow through. We got it. And so we broke up yesterday, follow through today. Now, can we get above 190? And if we can, then who knows how far gold could go. We break above 190, I can tell you that not only will there be short covering in gold, there will be buying interest because it'll be all over the news everywhere. And you might see some sort of a real significant move, possibly a run to 200. Wouldn't be out of the question. The only issue right now is that we're a little bit overbought right now, but let's keep an eye on this. The key here is a break above 190 now. So I think if you were looking for an entry, you should have been in now. We are. We have a position on GLD, so it's nice to see that move. Now, can we get above 190 and really take off and run? That would be pretty interesting. So we looked at MPWR back here on the 14th of November, and we are still a bit higher. If we go back and look, we closed at 535 on that day, closed at 543. So we're $8 higher than where we were on the entry. So that one's looking good. None of these have 5-wave impulse patterns labeled, which is crazy, I think. Looking at Visa, and so Visa was last week trading at 253 and trading at 252.94 now. So we've kind of just gone sideways on Visa over the last week. But that showed up on my search multiple days on my directional search, and that doesn't usually happen. So when you have a symbol that shows up multiple days, I usually try to take that and give it an opportunity, see if it can do something here. If the economy is going to be okay, you would think this time of year with consumer spending for the holidays, we're waiting, we'll be seeing what the data looks like from the whole holiday weekend where we had Black Friday and Small Business Saturday and then Cyber Monday yesterday. What are all those retail numbers going to look like? And that'll give us a pretty good idea, I think, of where the consumer is and if we're going to continue to see the consumer spending staying strong. Amazon is probably as good as anything to take a look at. And when we start getting numbers in from Amazon, probably tomorrow, I would imagine, we start to see some significant numbers across the board from the retailers on once they start compiling how things happened. That's going to give you an idea. If the retail sector rolls over and shows that the consumer has pulled back significantly, that could be kind of the start of the whole recessionary talk that may occur going into the beginning of next year. So that's where we are on current case studies. So other than BP looking pretty good, we might want to look to take GLD off in the not too distant future because that's got a nice gain in it, and we'll see how that plays out. But right now, let's see if we can find some sort of a new case study consideration to look at as far as the market today. And so here's what I was talking about. In my search, there's only 2 results. This is where Visa showed up multiple times. And I can tell you Domino's has showed up multiple days. It was on the search yesterday as well. So that is interesting. I mean, Paychex clearly makes a lot of sense too, kind of along the same lines as Visa this time of year. But Domino's, and you can see Domino's has a wave 5 to the downside pattern labeled, but that wave 4 at 80% means that's disqualified. And you can kind of make a case for, if the economy is going to weaken, if the consumer is going to pull back, perhaps instead of going out to eat at a fancy restaurant, you order a pizza. It makes sense from an economic standpoint. So let's take a look at the DMI and see where that is. And it looks pretty good with that big move up yesterday. Look at that, $16 to the upside yesterday. That wasn't earnings, was it? No, I thought we were in the middle of the earnings cycle here, so it had nothing to do with earnings. And breaking above 380 is something that I've been looking at on Domino's for a while, and that was quite interesting to me, seeing that on the chart yesterday. So to see that on the search, remember, when we do these trade finders, I don't pre-look at what the results were from tonight. So I do the updates and I wait and we look at them together. I just feel like that's a better learning experience than for me to go through and preset things. So I'd rather you just hear me talk it out. And so breaking above 380 is important. And here's where we get into, and I do this a lot, as you all know, give an aggressive and a more conservative consideration, because we all have different risk tolerances. So if you're aggressive, I would say you get in now, and you take a cue from that break above 380, and you're ready to go. If you're more conservative, then you want to see Domino's break 400. Let it break above 400, because then if you do, there's a racing analogy there of being in clean air. You're out front, you have clean air coming into the engine, your engine performs better rather than being back in the pack where you have everybody's hot exhaust and the rubber pellets, etc., and your engine is fighting and trying to work harder. So when you have charts And when you get above here, there's no resistance in that clean air, and things can really take off, and you can get some pretty substantial moves. Now we got to get above 400 before we even talk about that. So again, if you're tend to be in more of the conservative nature, then just watch dominoes, keep that on your radar screen, wait and see if we can get above 400. If we can, then get in. But if you tend to be a bit more aggressive, then you can say, hey, I really like this tick up in the ADX, this big separation of two directional indicators. I think that DMI is showing me that it's supportive of a potential break above 400. You look at the CCI, same thing. We're not anywhere near an extreme point high yet, so we could be going higher. And then you look at the Chaikin money flow, CMF, that's supportive as well. So all signs point to Domino's does want to take a shot at that 400 level. Now, whether it breaks it or not, we'll see. But it sure seems like it wants to at least test it. So we're going to go ahead and likely make that one our case study. But let's see what Paychecks looks like as the other one. And that looks pretty darn good too. Now let's take all this stuff off, and we have DMI that is supportive here as well. The only issue that I see here on Paychecks is we completed a wave 5 to the downside. It didn't extend more than 100%, which means you're going to go back and test the previous wave 4. It's exactly where we are. So we had a 61.8% wave 4. Again, why we talk about these fib levels all the time. So we hit that. We went down, made our wave 5 low. You expect a move back to the previous 4. It's exactly where we are. So, you know, there's no real qualification here between being aggressive or being conservative. You need to see a break above 120 either way before you do anything on Paychecks. And if we do see some of the retail numbers coming in from the holiday spending weekend that are the least bit disappointing, that could lead into something like a Paychecks from their business model. It's not quite the same thing as PayPal, but it could play in as a negative from the consumer side of things and consumer spending, and perhaps we hit that 120 and roll over and head back lower. So we'll have to wait and see how that plays out also. So this is definitely one to keep an eye on, but I don't see an entry on that today. Whereas I do feel like Domino's, we could take a shot at that at least to 400. So 12-point move, and then we could, you could take a look and say, hey, all right, let me pause, take the gains, see if we can get above 400 or tighten stops, whatever. So for tonight's case study consideration for TradeFinder, we're going to look at Domino's at least up to 400. And then you can decide whether or not you wanted to take gains. So that's the difference with the alert service at EWO Trader. We keep an eye on this stuff for you, and we send out alerts to our subscribers, both by email and text, on entries, any adjustments, and exits. So we kind of hold your hand a little bit and walk you through these, whereas at TradeFinder, we find considerations, and then you're kind of on your own as to what to do. But at least for now, we take a look and see if Domino's doesn't make a run at 400, and then if it does, how it handles that could determine whether or not you hold on to a position or take a quick small gain and exit. So that's where we are tonight. And Zach finished almost 5 minutes early, and it feels like I've talked a lot, but yet got a few extra minutes to take some questions, and happy to see what the folks want to look at.
Well, some extra time for Q&A is never a bad thing. Did we cover Bitcoin and coin this webinar? I was doing a bit of multitasking. I missed it if we did.
We did not. So let's go ahead and take a look at those. I've been looking at them constantly, but I know a lot of people do. That's why we usually look at them, but I did not include those tonight. So Bitcoin, after some sketchiness intraday, if you've been watching it, it looks like it's kind of trying to sneak out to the upside here. And I've gone through the whole howling thing, etc. I'm still slightly concerned about the vertical nature of this move here from 2,500 up to, call it 3,500. But that consolidation has been awfully impressive. And we are getting into what historically has been a bullish time of the, I don't know what you would call it. It's not really a season, but it's the progression, the way Bitcoin is designed, with the periodic howling that goes on, halving, whatever. And so, yeah, that looks, I don't know how you short that right now. Even though I still a little worry about that vertical move. But every time it's tried intraday to look like, Bitcoin looks like it's struggling today, it's met with buying. So people are coming in. Now, coin, which had mentioned that if it goes to the upside, it's going to take it with it. I think it was over the weekend. In the weekend update, I looked at this. So that would be take these 2 days away. So here we were, and I made a comment that, gosh, it's awfully vertical. I don't know if you want to chase this right now. We had talked in the past, as long as Coinbase stayed above 70, you stay long. And if Bitcoin took off, it's probably going to draw this with it. And then if we could get above 80, then we may have something going here. Well, both of those things worked out really well. That's exactly what happened. But gosh, that was vertical over the weekend. And so I did make the comment that I don't know if you want to chase that now. We're extended from where the close was Friday and the 10-day moving average. We're right here against those highs from July. Seems like maybe Bitcoin wants to rest a little bit here. So maybe we pull back, consolidate a little bit, at least consolidate around 110. Well, that has not been the case. So my commentary was, I've talked about some things that I got right. Well, that's not one of them. It just powered up yesterday and today. But I still feel the same way. That's too vertical for me. I can't chase Coinbase. I can't chase any chart. I don't care what it is. I don't care what sector it's in. I don't care what the fundamentals are. I can't chase a move like that. It's just not in me. Been burned too many times over 27 years to do it. So I refuse to. So I would have totally, completely missed yesterday and today's move to the upside. And I still feel like if you're long here, unless you have a very long-term horizon, man, you really ought to think about taking some profits here. If not, really tighten up your stops, because that's so vertical and so much separation from the 10-day moving average. It's way overbought at this point in time, but it was overbought on the weekend. Fairly is more overbought now. So could it get more overbought tomorrow? Yeah, there could be another vertical day. But I'm telling you, at some point, this will correct a little bit, at least consolidate. And when it does, they'll pull all that volatility out, just like I showed you on the chart of Micron, where we got out at $3.40 and the stock is still higher than the entry, and it's lower than where the entry was. And we made a 44+% gain on the position. That's the kind of stuff that goes on. So be really careful if you're long here. Might be a time to consider taking some gains, but my goodness, that's impressive.
It sure is.
Now they got they got the whole Binance thing settled, and so that's a positive for the whole crypto industry and stuff. So
yeah, that was a major impact for sure. And so let's go over. We'll segue now into different sector. Let's look at ELF for Chris from YouTube.
ELF, ELF.
Correct.
All right. Is that a play on words for the holiday season? We're going to look at ELF. Good on you if you are. If not, then it's still it's still pretty funny for this time of year. Elf Beauty, so I guess this is a beauty supply company, I would think. I have heard of the company before, but not super familiar with them. I assume there's something like Ulta, something along those lines. But
Spot on. Yep. Chris literally just wrote in Elf is the cheap Ulta.
oh, okay. Well, there we go. So we are in a 5-wave to the downside qualified pattern, but if I just say if the spending comes in, if the numbers come in, and it was a good solid holiday spending season with the Black Friday weekend with everything else, being above 120 would be key. Notice that yesterday and today we traded above 120 and couldn't close above it either day. So if you're long here, I don't see getting out yet. If you're looking for an entry, I would want to see a close with follow through above 120. But if you're already in, just keep in mind that it still is in a qualified downward pattern, and we need that break above 120 with a close to start to look at disqualifying this pattern. So if you're long and you've got a gain, again, tight stops, keep an eye on 120. You want to see it break above that. If it starts to break back below it, you might want to consider taking your gains. And as I said, if you're looking for an entry, you want to close with follow through above 120 so that we can look to disqualify this downward pattern. So pretty interesting looking chart there, and at a major point of resistance at the moment.
Yeah, spot on analysis there as well. Chris is long with 1229, 125 calls, looking for the run into Christmas. So
yeah, I mean, it makes sense to, just note that you want to see that break above 120 as well, which sounds like he's on it already. So
next up, excuse me. Next up, let's go to Roku.
Gosh, you would think if the consumer is doing anything that this would be good, and it is. Breaking nicely to the upside. These past 2 days, super impressive here. You wanted to see a break above 100, kind of what we've been talking about. You want to see break above resistance, moving averages, support resistance, whatever. We break above resistance here at 100. Not only is it the previous wave 5, but it also is one of those magic round numbers that we talk about a lot that have like the whole Star Trek tractor beam effect where they draw prices to them. But the break above 100 with follow through, super impressive on Roku. We're slightly overbought, so it wouldn't shock me to see some sort of a sideways move or perhaps a short-term pullback. But as long as we stay above 100, I think you're long Roku, and we're in that whole clean air thing. This could really take off and run. If you look for, this is one of those things where I think this is really smart management because when you had the little Roku device, how many people are actually going to go buy that and put it on their TVs? But now, if you buy a smart TV, it comes with it already in it. So very smart executives there, or business planning, whatever. They've done a great job along those lines, and so this could, with any sort of decent consumer spending numbers for the holiday, this could really take off. It's slightly overbought right now, but anything above 100, I think you're long this. The only time I would get concerned, even if we broke back below 100 from this overbought scenario, we would have to break 90 before I would think that would be a concern here. So I think you have a little bit of a buffer here. Good call on this one. And I think, pun intended, I think you keep an eye on this and perhaps can get more out of it. Pretty impressive move. That's what you want to see. When I keep talking about a break above a certain level with follow through, I've mentioned that so many times. If you're wondering exactly what does that look like, that's what it looks like. So we broke above resistance. There's the follow through day. Granted, we're just a touch overbought, but that's what you're looking for. And when you see that kind of thing, gosh, look at that DMI. Very strong move here. And I just don't think that one's done. even if we get some sort of a small pullback. You would have to break 90 before I would say look for a downward move there. So I think that looks great.
Well, I think Chris is going to be happy with your thoughts there. Being long, let's go over to coffee from GTR from YouTube.
So are we looking for the futures on coffee? Is that
That would be my guess.
okay? I actually haven't looked at those in a while, so let's take a look and see where we are on on coffee. Wheat, corn. Where's coffee? Here we are. Sorry, I clicked on the wrong one. So there's coffee, and I get why you asked. That's a pretty impressive run. I contribute to that. Drink coffee every morning. Can hardly start my day without it. But it looks like coffee wants to at least go test those resistance levels there at 190. So yeah, I think there's more to the upside there, and then maybe you want to kind of keep an eye on it. So if you're already long coffee, stay with it. Once it gets to 190, then keep an eye and see. Sorry, I swallowed my throat lozenge there, and didn't feel so good going down. They can get rather sharp on the edges, but so yeah, looking at 190, I think is where coffee's going, and then we'll have to wait and see. But nice zigzag pattern to the upside here. It looks great, and I hope whoever asks is long coffee, because that looks pretty good. We're at 100% extension. If we can get above 190, then clearly I think we're headed to the 161.8. But yeah, pretty nice move there on coffee. So
yeah, that was a good question there. So thanks for bringing that one up.
yeah, I haven't looked at that one in gosh forever. So
absolutely. So let's go over to natural gas.
So we'll use UNG to look at that, and I don't know what to say about this. I don't understand. It's so cold these last couple days. I made the comment yesterday that when we get the first really cold snap throughout the country, we'll get an idea on whether or not there's any sort of a bid. Well, that ain't what we were looking for today, because it's cold here, and I'm talking to some fellow traders that are well up north from where I am, and said that it's supposed to get really cold over the next few days. It doesn't seem like natural gas cares, and that's a concern. So the break below 6 was key. 6 was an area of support, and we kind of held there last week. A little bit of a look below it yesterday, but that move today is shocking, honestly, at this time of year. So I don't know what it's going to take to put a bid back into natural gas, but right now it just looks like nobody cares about this. And maybe if we get some unseasonably cold weather, we need some sort of a bid. But it's been a long time, and this is what I was talking about yesterday. It's been a long time since natural gas got below 6. Look at that. We're going way back, and even before this ETF was created. So to see the ETF below 6 is pretty amazing. So there's no history on the ETF of where it goes from here, which means it could make any sort of lows unless we turn this around rather quickly, and that means we have to get back above 6. Just running up to 6 means nothing. it's got to get back above 6 with some follow through to take a look at this at all. And the fact that it's doing this and we're almost to December and the weather's starting to get cold, at least at this point, is not bullish for natural gas or the ETF UNG. So, let's take a look at that one again next week. It's got to turn around fast. Otherwise, people will bail on this and you'll see it considerably lower.
Yeah, the chart kind of baffles me. We'll definitely take a look at that one next week. We got to go over and check Tesla with the news that came out today and overall your analysis on what you see there and the future for that.
Well, yeah, you just never count Elon out. You just never do. We talked about this, I believe it was on the weekend, maybe it was last week, where we had this triangle here to which Tesla broke to the downside. But oftentimes, after a breakout of a triangle, you come back to the point of the triangle. And so we were saying that says that you may see 260 again on Tesla, because you get the breakout of the triangle and then you run back to the point of the breakout. And that's what's occurring. And we had what I showed, again, I don't know if it was some event I was doing or if it was in the market update, where Tesla had a bit of an ascending triangle. Well, there's the upward break today, as you discussed. So I feel like what's to stop it from going back to 260? That's what's supposed to happen anyway. So once we get to 260, then I think we have to take another look at it and see how things look. But that's what should happen. You should see Tesla back to that point of the triangle. Again, just following triangle breakout rules. So,
Rob, I do have to further the question here with the news. I mean, I agree with you. You never can count Elon out, but with the news of it still being the 28th and they haven't released some vehicle specs and pricing information for that matter. Do you see that affecting? Right, yeah. The big reveal is the 30th, the scheduled release. That is, and they haven't released the exact vehicle specs and pricing for some vehicles, which some are speculating will affect the demand.
I get the speculation. I just, there's so many orders for that truck. It's going to take them years to fill the orders that exist already. Perhaps they're a little bit behind. I don't know, but Elon's already come out and said, hey, the Cybertruck isn't going to affect the bottom line for years. They're getting them out, and it's going to take a while before it adds anything significant. So I guess I just don't think the news is a surprise. I feel like he already came out and warned people about that, and they're just, if you look at the backlog of orders, it's insane on how many orders they have for those things. It's going to take them forever to fill those. And if the truck comes out and is halfway as cool as it, is expected to be, then they're going to get more. And I think, the stock price kind of resembled that during the day. I still think, based on just pure technicals, forget all the news and everything else, I think it goes to 260. Then we'll see. But it should retrace that breakout. That's what usually happens. And then, we'll take a look at and see from there. I just don't feel like the news was anything surprising, or anything significantly new. Who knows? But I still say from a technical standpoint,
I'm sure we'll be looking at it again here soon. See where you are.
I have no doubt about that. So
yeah, Tesla, coin, Bitcoin, and we can just kind of work those into the daily lineup. But I see we are at time. Do we have time for possibly one more question?
Sure, let's do it.
All right, let's finish on LLY triangle for David from Zoom.
Good old Lilly. Eli Lilly. That is an old school company, been around forever, and he is correct. That is a really nice looking triangle. let's see where the ADX is. They don't look much better than that. So spot on as far as looking at that trial. The only issue is it's a $600 stock. Now we like to see at least a 10% move. So if we go down the bottom of the triangles at 520, the top is at 620, so it's 100 points, and that's obviously more than 10% on a $600 stock. So that looks good as well. Let's see if the ADX is getting down there. It's gosh, that's I wish that ADX was a little lower. And the reason that I say that, I just want to be super clear on this. When you find one of these triangles, it does not have to have a low ADX to break out. Triangles are going to break out whenever they're ready to break out. Why I like to look at the ADX is a high percentage of the time when you see how the ADX has just worked its way lower here. As we went into, we had this break up here, consolidation, move up, and then the move here. And you see the ADX starting to work its way lower. When the ADX gets below 15, just from historical standards, that's telling you that the stock has been in consolidation for a while for the ADX to get that low below 15, which means that the likelihood is it's probably getting ready to break out. So when you have a well-formed triangle like this is, and you have the ADX below 15, you've got two things in your favor. You've got a pattern that is showing you potential breakout, and then you have an indicator telling you, gosh, this has been consolidating a while, and the likelihood is it's about to break out. It's probably going to break out fairly soon. So the issue here, even though it's a very well-formed triangle, is it could continue to go sideways here while the ADX goes lower. So I wouldn't want to talk somebody out of putting on straddle, strangle, something along those lines for a breakout of this triangle, because it is well formed and it's a large enough triangle, more than a 10% move factored in. So those things work from setting up a strategy around a triangle breakout. Just understand that if it goes sideways for another week or so while that ADX goes down, that's not a surprise. Now, it may break out tomorrow. Like I said, it doesn't have to have a low ADX to break out. Triangles don't. But I really like it when you have a pattern that well formed and it coincides with a very low ADX. It just puts another little feather in your cap, another percentage in your favor. So again, you want to take advantage of a potential breakout there. Yeah, I love the pattern. It just wouldn't shock me if it manages to somehow go sideways for another week or so while that ADX works its way lower. All right, so great session tonight. I hope everybody enjoyed it. I did. Thanks for your attention. We really appreciate your valuable time. Time's the most valuable asset we all have, and we appreciate when you spend it with us, and we do our best to make it informative, educational, and even maybe a little bit entertaining. So thanks so much. Enjoy the rest of your week. Look forward to